2 and 3. Good morning, students. Today we are on the second part of our paper, financial reporting. So today we are having with us our Honorable Council Member, CA Pramod Jain, who is also the Chairman of ASB, Accounting Standard Board, a very important committee who are actually taking care of setting up of these standards. And Sir is going to apprise you as to how really to study and what are the nitty-gritties of the Ind AS you should keep in mind. And from his experience, he's going to come out and tell you about the same so that you are able to attempt your questions in a very seamless manner during exam time. Sir, over to you, please. Thank you.
Thank you very much, CA Dr. Vanda Nagpalji, the Secretariat of the Board of Study Academics, and both the speakers today, Shilpa and Anshul, and all my dear friends, students, namaste to all. Students, yes, exam times are always there, but yes, we need to study and then appear. But merely, I would say, just clearing the exams is one thing, but understanding the concept is more important. Because once you understand the concepts, then you would be able to not only clear the exams, but be successful in the life. If I talk about purely the examination, then yes, you have to be very careful that it is not a one-day job. You have to basically build that within your thought process or your day-to-day working. It is not that on the you prepare well, or you don't prepare and you feel that on the day of the exam, that is on the D-day, you will be able to perform very well. So it is a gradual process. You take example of any sports person or any person. If you see, then your working has to be great and your performance on the D-day has to be excellent. So once you start writing your examination, so first you have to understand, because you have got 15 minutes time. So how to utilize that? Read the question paper first, analyze what you know the best, and write those answers first. Write those answers first. And suppose there is a question which has certain subparts, say 4A, B, C. So it is not that you know 4A and you don't know 4B. So you put 4A first and then answer some other question and then answer 4B later on. In that way, there could be an issue. Because the invigilator who would be the examiner who would be verifying your copies, he may not be able to correlate at some time, though he would be able to, but still in certain cases to ensure that your all answers are properly marked, answers all the subparts of the question in the same sequence and not differentiating. Another very, very important is the legibility of your paper. How you have written it. You know, the handwriting is one of the most important. You just take your example. Suppose you are verifying an answer sheet of some other person, and that handwriting is so in such a way that you are not able to read what is written. So you have to practice to have your handwriting in such a legible form, so that the invigilator, when he sees the paper, he feels happy and is able to understand and he's able to read and understand what you're writing. Writing in a haphazard manner will not help you at all. In case in certain question you are having an assumption, so in that case, what is the basis of your assumption? Please put that in your answer. Put that in your answer, because you might be thinking that this is the assumption, but the examiner may be having 4 or 5 assumptions in his mind, or which has been given by the institute. Okay, this. So you have to write your assumptions on that answer sheet. That what are your bases? And of course, when the paper is financial reporting for the final exam, and the paper is on the basis of Ind AS, then of course what you have to do is ensure that the due emphasis is given on the relevant Ind AS and relevant paras. Now, suppose you are sure of that, yes, this Ind AS is applicable, or in conjunction more than one Ind AS is applicable. So writing those, but in cases you feel that you're not exactly remembering the paragraph numbers. So in that case, instead of writing a wrong paragraph number, try to generalize it and put the Ind AS number. Because if you put a wrong paragraph number, the answers would be reduced. So small things where you can improve in presenting your knowledge to the examiner, I would say. So first 15 minutes, which you get, read that question paper, analyze which you know, which you will answer, which you will not answer, and then answer it accordingly. Because as said earlier, when you have examined all those, so which of the questions you know best, answer that. And of course, take care of your speed. It may be that you know answers so good that in the allocated time, what you do that you write too much more out of your eagerness, and you consume more time in a single question. So that would be an issue. So mark that, okay, how much minutes I'll give on each question. So if you say there are 5 questions, so you put not 3 hours, you put 2.5 hours and give 30 minutes to each question. And beyond that, pin down and then jump to the next question and then answer later. Because if you are missing one question to be answered, you are losing on a great mark. Because once you attempt a question, you will get marks. But if you don't attempt, you will never get a marks. So do that accordingly. So planning that within 2.5 hours, there is another way out, which I hope all speakers, all motivators would be telling, to write that at your home. Practice at your home. Merely reading will not help. Write that. Take a model text question. You'll get on the site. You'll get on the institute site. You'll get on the Google. Take the question as it is. Answer that within 2.5 hours. Answer that within 2.5 hours, and see that it is legible. And then you yourself become an invigilator. You give marks to yourself in the worst way you can do. In the worst way we can do. Jitne kam marks de sakte hain, utne kam marks dijiye apne aap. Because only that way you will improve. Don't be disheartened that when you are attempting at your house and you are getting only 15-20 marks in your first paper. Don't be disheartened. That is a good sign if you are getting 15-20 marks in your first attempt at your house without too much preparation out there. So when you're getting 15-20 marks, check from the answers which the model answers are there. So you would come to know what the invigilator wanted. It may be that you are reading a question, you are thinking, okay, it is about, say, foreign exchange, the index related to the foreign exchange, and you're writing something else related to, say, non-monetary assets out there. But the question was on monetary assets. So you've written everything on the non-monetary assets. So what is the question? Reading of the question is most important. What we have seen practically. reading of the question, what is the question asking, a small twist in the question, a small change in the language, and your answer is totally different. So the crux of the whole CA examination, not only this paper, I would say, all papers, is reading and understanding what is sought. If in a question, two questions are, in a one question, there are 2 or 3 characteristics or 2 or 3 questions asked. You have to answer each and every characteristics of that question. We have seen practically also during the articleship training also. We take an example, suppose we have to prepare and reply to a show cause notice. And there are 5 questions asked. And in that 5 questions itself, within that question, there are 2-3 questions. So when we tell to the articles to prepare it, they just give one answer out of that. Within that one show cause notice, one paragraph, there are 3 issues asked for. Suppose they are asking, just giving an example of through an income tax, that give the details of the unsecured loan along with the PAN address and their confirmation. And what you do, just give the confirmation. No, if they are asked 5 things, reply 5. So same thing is there in your question papers also. Reading of the question, understanding that question would be very, very important. And then answers, right? Of course, merely writing lengthy answers will not fetch you the marks. Being crisp, you should be able to come out with what is required in a way what the invigilator wants. So see that model test also. At the time of preparation, please take care that at the time of preparation, you don't go on a selective basis. That, okay, my 60% marks are covered, I'll get that 60%, I'll attempt that 60%, and I'll get 40%, 50%. Don't do that. What you do, you have to read thorough the whole course. And for that, there is nothing better than the institute study material. So the institute study material, there may be that some of you may be going through the coaching classes, and some of the teachers will be saying, okay, we have got the same as per the institute, read our material. And because you have done that training and that coaching, and so you are accustomed to that study material. But friends, believe me, though the Board of Studies, the team is there, headed by the secretary. But we have the, I would say, some time we have to dedicate to moderate the papers also. So when we see the examiners setting up the questions, we see that they are taken mainly from the study material, So please read the study material carefully. It has to be through that study material, you have to answer certain questions. So everything comes from the study material. In fact, when we sometimes ask to that paper setters, okay, from where you have taken this question, what is the answer? They have to refer to the page number of the study material, and that, okay, from there we take that question or answer. Vandani, sorry for sharing that, but I'm telling to the students that study material is so important, because all the examiners, paper setters have been given that study material itself to prepare the questions. So reading thoroughly the whole study material would be a great thing. I hope I have not said anything which is contrary to. Have I said something like that, Vandanaji?
No, sir. You have only encouraged students to go through the material of the institute, sir.
No, but what I'm told you, Vandanaji, is actual. It is actual. What I've said. I'm not exaggerating anything.
No. Sir, you are, sir, very apt, sir. Very apt. Very aptly you have covered it, sir.
Thank you. Right. So yes, already, of course, we have discussed how to attempt this theoretical. You should focus on all types of questions. And written practice, we have already discussed. Time management at your home without any stress. Don't take 3 hours. See that your time is 2.5 hours, so that you are able to attempt. Now, suppose there is a question paper where there are 6 questions, and you have to attempt any 5. So when you are practicing at a home, attempt all the 6 in 2.5 hours. Answer all the 6 questions, give marks to all the 6 questions, and aggregate the lowest one off. So this way you will be, and when you check your answers from the suggested answers, see where you are lacking. What was asked, what was answered, and which subject you are lacking. And then next time when you study in that particular, when you are studying at home, rework those subjects, those areas where you know that you are not able to answer or you need improvement, you are weak. So improve on those aspects at home, and then again answer another question, another question set paper. And then your that 10, 20, 15, 19, 20 marks, they would improve. So attempt at your home at least 5 to 6 question papers, not simultaneously. Attempt one paper, give marks, then wherever you are weak, read that, study that again, read that content, attempt another paper, then again see what were the shortcomings and see the gradual improvement you are getting within yourself, right? When there are computations, in certain papers you see there could be calculation mistakes, considering wrong figures, instead of subtraction you have done addition or vice versa. Or suppose the figure was 1025 and you have written 1052, because on that day on your exams you have to be fully alert. Sometimes we have seen students not sleeping the whole night preparing before the exam time. Also at the center the books are open, they are reading. So when the mind is not free, it is full of stress. How will you be able to give your best? Have enough sleep. Your body, your I would say physical and mental health both have to be in perfect shape on your exam day. Both physical and mental, I'll say. You should take walks. It is not that full-time study is to be there. Give some relaxation, do your walks, exercise, whatever you want to do, and have a proper sleep. A mind, a body with full relaxation would be able to give the best on the D-day, on the paper day when you are giving. Because if you are, sometimes when you're going to attempt your paper, you just 5 minutes or 10 minutes prior to that examination time, you'll feel I know nothing. It happens. It happens. But when you get that 15 minutes to read that paper, whatever you have read earlier in the past few months, not last 1 or 2 days, but past few months, the number of time repetition is very important. Single revision will not do. Have revision 4 to 5 times. So when you read that paper within 15 months, everything would be recalled. Everything would be recalled. But reading 1 time or 2 time revision will not help. It is number of time revision you do and plan your timing, your timetable. The longer goals, the shorter goals, that would help. Here you should know for this paper the formats of the financial statements. For this paper, of course, you know that it is Schedule 3 of the Companies Act, and which has 3 divisions. And for this paper, it is Division 2, which is for the Ind AS one, right? So take accordingly, be stress-free and prepare well for your exams, and never be negative about yourself or your knowledge on the subject. You have to be positive. You have to be confident. If you say you are going to attempt a paper with a feeling that I am weak in this, how you will be able to succeed? You will be able to succeed only when you are confident. Okay, I know about this. So be fully positive about yourself. Be fully positive about. So number of time practicing at your home will give you that confidence. Take my words. Avoid those negative surroundings which are near you, saying, okay, this is tough, this is bad, institute is doing like this, or cutting the marks. Take my words, institute in its history has never deducted any mark, have always granted grace marks. Always granted grace marks, but they don't have the power to deduct the marks. Whosoever may say anything, but no one will have any evidence since the inception of our institute, since 1949 to say that ever to maintain a percentage, the marks are being deducted. Marks are never being deducted. Is based upon certain cases. The examination committee has that power, president has that power to give the grace marks, but never deduct, never deduct. So please take out from your mind that marks are being deducted in any paper, any paper. Plan your studies, plan your revision, eat properly, have a nutritious food, don't skip the meals. Dieting and studying both cannot go side by side. Be very careful, because you have to maintain, because you are sitting all the time. So you start the dieting. So proper nutrition is not going in the mind through your food also. Have plenty of fresh air, go for the greeneries. So health, mind, both have to be very, 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 very apt on up to the time you are going to, you should be ready to play that cricket match, I would say, or test match, or whatever you want to say. So you have to prepare for that. And of course, avoid social media. It is a great distraction. Distraction because you are doing something and revising something and your phone buzzes. You say, okay, kiska message aaya, let me check, and then you reply. So your time goes. Once you go on the WhatsApp, Twitter, or Facebook, wherever you go, your 15-20 minutes, you think of 5 minutes, but hours and hours go out of it, and your mind is disturbed about if anything negative comes. You need to, I would say, sacrifice a bit. Avoid social media. Watch your TV, not the news, your entertainment programs once in the evening or something like that. Remain refreshed, but avoid the social media, which sometimes distract. Yes, to need updated, you see the ICI portal, or you check your emails. If anything has to come, it will come to your email or the ICI portal. Nothing else. And in fact, of course, you have to do your best. Our Gita says, do your best and leave the rest. अपनी करनी करो और फल की चिंता ना करो, फल अच्छा ही आएगा if you have done the best. So nothing to worry about it. And if possible, enjoy this time, because you will not be getting this time again. Preparation, that is an enjoyment. Appearing for an exam, that is an enjoyment. If you are able to enjoy, believe me, there is nothing that there is a fixed percentage which has to pass. It can 100% can pass, because only if that 100% who are appearing are confident about themselves and have prepared according to that. Exam also बाहर निकलते you start discussing your paper, तुम्हारा कैसा हुआ, इसका कैसा नहीं हुआ, and you are getting depressed, and then again for the next paper you have to study. So that negative things sometimes come to mind. So never compare yourself with others. Everyone is unique and everyone is the best. So never compare yourself with everyone. And of course, for quick revisions, the Board of Studies have got the Students' Journal. The website is there, which the Board of Studies have shared with you. You can go on the portal and verify those. At the end moment, 1 or 2 days before your exams, when at the time of your full revision, you must have prepared your notes. Read that. Go through that institute material once again. Wherever you are weak, revise that. Right? And do accordingly, and believe in yourself. And my best wishes to each and every student, because some or other day you are going to become one of us, all chartered accountants. You're all chartered accountants. So I really, my best wishes, and I welcome you to join this august profession of chartered accountancy. Thank you, Vandana ji, for inviting me to share a bit of my views with the students. Thank you very much, and all the best, students. Thank you.
Thanks a lot, sir. Sir, the manner in which you have actually conveyed your message to the students, it's going to be really helpful for them. And I think they will keep in mind the tips which you have given it to them. And by just understanding your tips and the manner they need to prepare themselves and be there before the exams and during exams is really going to make them successful. And success is and BoS is always there for this success. And success is for those, like you said, those who are confident and those who enjoy. I think when my studies become my enjoyment, giving exam also become an enjoyment, and something which I do it for my enjoyment, obviously I'll be successful. Nobody can stop, sir. Thanks for these words, sir. Thanks a lot. And now we'll start. Thank you, sir. Now we'll continue with the session with our faculty, Shilpa and Anshul. So before Shilpa and Anshul take on from me, I'm just apprising as to what has been done yesterday. So yesterday we had told you about the section-wise weightage, about the skill-wise weightage, and the commonly occurring errors which you have committed, students who had appeared last time, as to how to really mend those particular errors, don't repeat them. And also yesterday, the question was done from business combination and consolidation. That was done. And then another question from Ind AS 115 was also done by a faculty. I hope you have understood the nitty-gritties of these Ind AS and how to apply them while solving your questions. So students, do not worry. Our faculty are there for you. They'll be taking you through. Today, they'll be starting with section 3, which is covering Ind AS 2 and Ind AS 16, plus along with section 2, Ind AS 36. So they'll be covering the question from these particular 3 Ind AS, and they'll tell you how really to solve the question applying these standards. Then next part which they'll be covering will be Ind AS 115 from section 2 and Ind AS 116 from section 3. Thereafter, they'll go to the next part, which is going to cover section 1, Ind AS 7 and section 4, Ind AS 21. They're going to cover that, right? Which is a combination of foreign exchange and cash flow. These 2 standards will be covered by our faculty. They'll be taking the question from this. Then they'll come to section 3, which is covering Ind AS 16 and Ind AS 40. Very important Ind AS. They'll be taking you through this question, which will be covering both these standards. So students, they are covering mainly all the standards and the combination of standards which are being coming in the papers. The question which is arising out of these Ind AS will be covered by them. How to deal with this Ind AS, how to apply them, how to come out and write the steps. Do not skip the steps, because step marking is being done. Don't think that your balance sheet is tallying. Consolidation, okay, my balance sheet is tallying. It's perfectly okay. But you need to keep in mind which all Ind AS are covered in that. Have you given the proper steps? Have you written the steps? Notes you have to prepare very carefully. So students, wherever you get stuck up, send your questions. Our faculty will be taking up the questions. And even if later on also you have any problems, you can always go to our app, mobile app, BoS mobile app. And it is available in Android as well as in the our iPhone. Android iPhone is also available, right? So both the ways, Apple as well as Android, both versions are available. You can post your query over there and you'll get the response. Okay, so students, be calm, listen to the faculty, write down the steps, do the questions, and for last moment revision before the exam, go through our capsules which are given in the journal, and on the BoS knowledge portal they are covered in the quick reference. Group wise we have covered all the capsules, so you will not have any problems. So students, kindly note down these points, and I'm giving the mic to now Shilpa and to Anshul. They'll be taking care of all your queries also. So over to Shilpa and Anshul. All the best to you, and all the best to you students.
Thank you, ma'am. Thank you. Welcome students for this today's session. This is in continuation to yesterday's session. Yesterday we have, as ma'am have already told you, that we have covered important section, which was section 6, which covered group accounting, Ind AS 103, business combination and consolidation. We have covered both these standards in one question by doing the accounting for 2 different days. Today we will be covering one important section, which is section 2. Section 2 is on assets and liabilities. So today we'll be taking a question which has combination of 3 standards. Just a minute. Students, just a minute. Okay, students, sorry for the interruption. There was some technical glitch because of which you were not able to see the video. So hope now things are okay. Hope now you are able to see the video. Let's start with the question. Question 1 with this today's first question which we have taken is from the suggested answer of January 2021 examination. This question was on Ind AS 2 and Ind AS 8. This question appeared in that exam for January 2021 examination for 8 marks. Let's start with the question. H Limited constructed a warehouse. As I told you yesterday also, that before starting with the question, we'll just go through the requirement part of the question. This will help us in understanding how to study the scenario which is given in the this particular question. So first of all, we'll be moving towards the requirement part. This is the approach which I prefer, so I would like to share it accordingly. You are required to prepare accounting entries. Accounting entries means journal entries. You are required to prepare journal entries to record the effects of the events after the end of the reporting period in the accounting records of H Limited for the year ended 31st December 2019. So important is 31st December 2019. Kindly ignore tax impact. What does this statement implies? First thing, this statement implies that the accounting year is your calendar year, not the financial year. You have to prepare the accounting for January to December, not for April to March. So this date is important, December 2019. So you are preparing accounts for 2019. Again, we'll go through the statement. Accounting entries to record the effects of the events after the end of the reporting period. It means every event and transaction which occurred till 31st December had already been accounted for. What we have to do is, the requirement is to account for the effects which have been, or effects for the events which have occurred after the reporting period. So before reporting period or till reporting period, everything has been accounted. We are assuming that. No need to mention in the solution because it is clear from the statement. So what we have to do is, we have to account for the events after the end of the reporting period. Second requirement is discuss disclosure requirements in above case as per relevant Ind AS. Will your answer be different if there was no structural default and damage to the warehouse had been caused by an event that occurred after? In case this event was not after reporting date, then what should have been the accounting? So that's what the question is. Now let's go through the scenario. What is the situation? What is the scenario according to which we have to reply? So our question starts with, H Limited constructed a warehouse at a cost of rupees 10 lakhs in 2015. It first became available for use by H Limited on 1st January 2016. So irrespective of when it was constructed, we have to start the accounting from 1st January 2016. This is the first date for available for use. This is important. We should keep that in mind. On 29 January 2020, H Limited discovered that its warehouse was damaged. Since we have read in the requirement part that we have to do the accounting for 31st December 2019, it means 29 January 2020 is an event or a date after the reporting date. H Limited discovered that its warehouse was damaged. The reason for damage was during early February 2020, an investigation revealed that the damage was due to a structural fault in the construction of the warehouse. The fault became apparent when the warehouse building leaked severely after heavy rainfall in the week ended 27 January 2020. It means every event is taking place after the reporting date. On 29 January, they found that there is a warehouse has been damaged. The reason for the damage they found in the month of January, and the rainfall occurred in the week ended 27 January 2020. So 27 January there was a rainfall, because of which on 29 January they found warehouse was damaged, and the reason was discovered in the month of February 2020. The discovery of the fault is an indication of impairment. So again, now we are talking about impairment also. So H limited was required to estimate the recoverable amount. Since we are talking about impairment, we need recoverable amount, or we need value in use and net selling price. So now already in the question, recoverable amount is given. So value in use and fair value is not required. Recoverable amount of its warehouse at 31st December 2019, this was rupees 6 lakh. Further, so recoverable amount is 6 lakh. Furthermore, H Limited reassessed the useful life of its warehouse at 20 years from the date that it was ready for use. So, because of structural default, we found impairment is going to happen because warehouse has been damaged. Now, at the same time, when impairment has to be done, they had to revise the useful life. Revising of useful life was 20 years, but not on the date when they have revised. They have found that 20 years from the date of use. And what was the date of use? From the date when it was ready for use, that date was 1st January 2016. It first became available for use on 1st January 2016. So from 2016, 20 years was the revised useful life. Before discovering the fault, H Limited had depreciated the warehouse on the straight line method to a nil residual value over its estimated 30-year useful life. So original useful life was 30 years, and this 20 years is revised useful life. This 30 years is revised useful life. See, so this whole information is related to warehouse, means property, plant and equipment. And when it is regarding property, plant and equipment, our standard applicable will be Ind AS 16. Okay. Next, moving on to the next paragraph. Seepage of rainwater through the crack in the warehouse caused damage to inventory. When warehouse was damaged, definitely inventory kept in that warehouse, that was also damaged, worth about rupees 1 lakh cost price, and became unsaleable. The entire damage inventory was on hand as at 31st December 2019. H Limited, it means this inventory is a closing stock as per 31st December, as on 31st December 2019. H Limited has not insured against any of the losses. Against any of the losses means against that loss of warehouse and also the loss of inventory. It accounts for all its property, plant and equipment under the cost model. H Limited's annual financial statements for the year ended 31st December 2019 were approved for issue by the Board of Directors on 28 February 2020. So, event occurred on 29 January. They found 27 January. These are the 2 days when event occurred. However, the accounts are approved for issue by Board of Directors on 28 February. So this is an event after the reporting date, but before approval of the financial statements. So we have to account for these events in case the conditions for those events were existing on the reporting date. So damage for the warehouse was because of structural default. Structural default at the time of construction, it means construction took place on in the year 2015. So since 2015 there was default. ये जो डिफॉल्ट चलता आ रहा है, ये आपका आज की डेट में नहीं आया या फिर 2020 में अपने से सडनली नहीं अपेयर हुआ. ये कंस्ट्रक्शन के टाइम का डिफॉल्ट था. इट मींस कि आपके 31st December 2019 on 31st December 2019 it was already existing. कंस्ट्रक्शन का डिफॉल्ट है, स्ट्रक्चरल डिफॉल्ट है. तो इसका मतलब है ये इवेंट, ये जो आपका अकरिंग आफ्टर बैलेंस शीट डेट है, बट the conditions for this event was already existing on the reporting date, in fact much before the reporting date. So we have to do the accounting for this, because as per Ind AS 10 you are meeting the criteria for any events occurring after the balance sheet date. If conditions existed on the reporting date or prior to the reporting date, then adjustment is required. It is an adjusting event. So when it is an adjusting event, what we have to do is we have to do two things. First, depreciation, because there is a change in the useful life of the asset. There is also conditions for or indications for impairment. So we have to do two things. One, we have to calculate because of change in useful life, because of change in residual value, because of change in the method, we have to recalculate the depreciation. So depreciation, first thing we have to do is we have to recalculate the depreciation, and second is we have to calculate the impairment loss. So first thing is recalculation of depreciation. Let me just remove all these. I need space to write, so I'll just reduce the size so that we can write things here. Okay, students. First thing is we have to calculate the, since I am having, now we'll be getting space to write. First thing is that we have to calculate the revised depreciation. First of all, our asset was of rupees 10 lakh. This 10 lakh was in 2016. We are standing in 2019. For 2019, we have to do the accounting, and for 2019, we have to calculate first we have to calculate the opening book value of this asset. 10 lakh divided by 30 years with no residual value, it means your depreciation amounts to 33,333. This was for 1 year. Now for 1 year, if the depreciation is 33,333 to 2016, 2017, 2018, for 3 years, 2016, 2017, 2018, for 3 years, depreciation would be 1 lakh. This 1 lakh reduced from the cost of the asset, we get opening book value of the asset on 1st January 2019. That comes to 10 lakh minus 1 lakh is equal to 9 lakh rupees. Fine. 9 lakh rupees. Out now for 9 lakh, we have to calculate the revised depreciation based on the revised useful life. Revised useful life was 20 years from the date it was ready for use, not on 2019, it was decided 20 years. So if it starts from 2016, then 2016, 17, 18, 3 years have already passed. So out of 20 years, 3 years have already been passed. So we have to calculate the depreciation for remaining 17 years. So 9 lakh divided by 17 years, we find the depreciation to be 52,941, almost 52,000. Now, as we discussed earlier, we have to do the accounting entries for the effects for the events after the, we have to do the accounting entries for the events after the, which have occurred after the reporting period. It means till 31st December 2019, we have already accounted for, and by that time, since there was no structural default, there was no case of revision of useful life, so we have accounted depreciation by this amount. Can we assume this? That we have already accounted depreciation for 2019 also by amount 33,333. But because of certain events which occurred after the reporting date, we have to revise the depreciation amount. And the revised depreciation amount came to 52,941. But accounting has been done by 33,333. So difference of this two figure. So difference of 52,941 minus 33,333 is an additional depreciation which we need to account for. So what is the additional depreciation amount? That comes to 19,608. This 19,608 is to be additionally accounted for. So we'll be doing this. First, we'll be accounting. The journal entries will be depreciation expense DR to warehouse. If we are directly charging the depreciation, we are deducting directly from the property, plant and equipment, and this 19,608 is to be deducted from the, I mean to say, we have to credit property, plant and equipment. In case we apply the accounting by creating accumulated depreciation, then instead of PP, we can also use accumulated depreciation account. So first entry we are through with. Now, second part was impairment. How to calculate the impairment? For calculation of impairment, we have to calculate the carrying value, and the carrying value and difference of recoverable amount is impairment. So first of all, we'll be calculating the 9 lakh was the on 1st January 2018. 2019, 9 lakh was the opening book value. We have charged the revised depreciation by 52,941. Our figure comes to 9 lakh minus 52,941. Our book value comes to 8,47,059. But recoverable amount is 6 lakh. So what will be impairment? Impairment will be difference of these two figures, which comes to 2,47,059. This is the recoverable amount. This is the carrying value. So carrying value minus recoverable amount, this comes to impairment loss. Accounting for impairment loss will be your second entry, impairment loss account here, directly to property, plant and equipment to be credited, or accumulated depreciation to be credited. So second entry for this 2,47,059 will be doing impairment loss DR to debit it to property, that is warehouse, or your accumulated depreciation account. So we are through with this first part, where prepare accounting entries to record the fix. We have done this first part. Now second part is discuss disclosure requirements in above case as per relevant Ind AS. So as per relevant Ind AS, there are two relevant Ind AS. First is your Ind AS 16, property, plant and equipment, according to which we have done first entry. Second is your Ind AS 36, impairment, based on which we have done the second entry. This also includes your carrying value will be there. Then third scenario was your regarding inventory, for which we have to apply Ind AS 2, inventories. So first disclosure will be regarding your Ind AS 16, that you have to inform that there was a damage. Because of damage, your warehouse has been damaged, and there was heavy rainfall on this date. Because of that heavy rainfall, warehouse was damaged, and the reason when you investigated further, you found that this is because of structure default. So impairment law, this gave indication of impairment also. So these are the information which has to be disclosed. Let's see how to disclose it. The damage to warehouse is an adjusting event, occurred after the end of the year 2019 for the reporting period 2019. Since it provides evidence that the structural fault existed at the end of the reporting period, it is an adjusting event in spite of the fact that fault has been discovered after the reporting date. So the effects of the damage to the warehouse are recognized in the year 2019 reporting period. Prior periods will not be adjusted. Why will prior periods not adjusted? Prior periods will not be adjusted because even though this situation that there is a structural default that was existing on the balance sheet dates, but that event was after the approval of financial statements for the previous comparative period. So your previous comparative period was 2018. By that time, there was no heavy rainfall, because of which warehouse was damaged. So there was not any event occurred at the time when those financial statements were approved. And also at that time when the financial statements were prepared, they were prepared in the good faith that everything is going perfectly fine. So prior periods will not be adjusted because those financial statements were prepared in good faith and had not affected the financials of prior years also. Second disclosure we have to make for inventory. First of all, I want to know from you all what will be the accounting for inventory. There was seepage of rainwater which damaged the inventory. Entire damage in inventory was damaged, and the cost of that inventory was 1 lakh. This was the closing stock. Now I want answer from you all whether this will be adjusted in the books or not, whether this is adjusting event or not. I want answer from you all whether this is an adjusting event or not. Soon, students, I am waiting for you all. I want answer from you all whether it is an adjusting event or not. Okay, students, one student is saying that there is some problem with the visibility of this screen. Students, there may be some bandwidth problem. We are working on this at the back end. Just have patience. We'll be just trying to, otherwise we'll be sharing this file with you in this YouTube link, so that you understand what is the question is with you. I'm waiting for the answer right now. As per you, whether damage of inventory is an adjusting event or not. So students, by the time you prepare your answer, let me start with, because we have already, some time was wasted in between because of technical hitch. I'm coming up on this. Okay, seepage of rainwater through the crack in the warehouse damaged to the inventory worth ₹1 lakh. But at the time on 31st December 2019, this entire inventory was on hand. It means at that time there was no such situation which exists that they say that the inventory will be damaged. They were in a good condition, they were in a proper condition. Event which occurred after the balance sheet date was related to the warehouse. That condition existed, or for warehouse the condition was existing, but for inventory no condition was existing on the balance sheet date. For inventories it was in good situation, it was in good quality, there was no damage. Event which occurred after the balance sheet date, because of which that the inventory was damaged, that was not existing, that those conditions were not existing with respect to inventory on the reporting date. So this will be considered as non-adjusting event. No conditions at reporting it. Definitely good, Sumit. Your answer is correct. There are no conditions on the reporting date. Therefore, this is a non-adjusting event. And since it is a non-adjusting event, no accounting is to be done, no adjustment is to be done for inventories. But at the same time, we have to give the disclosure. We have to give the disclosure. Why? Because inventories have been damaged. There was a huge loss. Material losses there, significant losses there. Therefore, we need to disclose this. So since our second part requires disclosure requirement, so we have to disclose this. So our second answer will be with respect to damage of inventory due to seepage of rainwater occurred in 2020. It is a non-adjusting event after the end of the 2019 reporting period, since the inventory was in good condition on 31st December 2019. Hence, no accounting has been done for it in the year 2019. Therefore, no accounting entry we have passed in first part. H Limited must disclose the nature of the event and an estimate of loss, financial effect in the notes for 31st December 2019. This we have already discussed. Third requirement of the question was, will your answer be different if there was no structural fault and damage to the warehouse had been caused by an event that occurred after 31st December 2019? Our base for answering the first part was that there was a structural default and that existed prior to the reporting date. It means that in case there was no structural default, it means no conditions existed on the balance sheet date. Basic answer changed, so it will be considered as a non-adjusting event. And when it becomes a non-adjusting event, because structural default was not there, this was a new damage because of heavy rainfall which occurred in January 2020. So it is a non-adjusting event. Since it is indication of impairment, everything will go in the disclosure part, but no accounting will be done. So as per part 3, we does not require any any accounting entry to be passed for any damage regarding the warehouse or any impairment, because it is a non-adjusting event. But definitely this is a material loss, so disclosure is required. Disclosure is required in both the cases, when you are passing the accounting entry and when you are not passing the accounting entry. In both the situation, disclosure is required. However, in case when you are not passing the journal entry, still disclosure is required. So by this we have completed our first question, which is on Ind AS 2 and Ind AS 8. Okay, well, I was going through the queries, and I found Prerak Saxena has asked question on on chain holding. Chain holding, since Prerak, we have not included that question in this session. So I would request you to share your email ID. We'll be replying you separately on this, whatever your query is, since it does not pertain to the session. So unnecessary students who have not gone through that question, they may face problem. They may not understand and it will be waste of their time. So just share your email ID. We'll be replying you separately one-to-one. Okay. Shraddha, yes, you got it. Okay, then we'll be moving to the second question, and our second question will be taken by Anshul. So Anshul, over to you. Come.
Thank you, Shilpa ma'am, for the question which you have covered, which had come in the previous examination. So students, once again, we are going to cover one more question which had come in the exam only. So although it is a simple question, but even then the students had committed mistake therein, because such kind of question had come for the first time. So maybe the students were not aware of the relevant provisions of the respective standards, due to which the error was committed by the students. So we will just go through that question. The question relates to Ind AS 40 and Ind AS 16. So this question had come in January 2021. Okay. So first we go through the requirements of the question. We read the facts of the question and then reply it accordingly. So before that, we go through the question. On 1st April 19, an entity purchased a building for 50 lakh and paid a non-refundable property transfer tax and direct legal cost of 250 and 50,000 respectively while acquiring the building. So the company is purchasing a building, okay, office building. As we know, which standard is applicable if we are purchasing an office building? Ind AS 16, property, plant and equipment. Okay, because as per Ind AS 16, as we know, this is an owner occupied property. Okay, the property which is held by the owner or by the lessee as a ROU asset for use in the production of supply of goods. Either the building is being used for the production or supply of goods or for administrative purposes. Okay, so either it is being used for the production of goods or for rendering of services, as the case may be, or for admin purpose. Okay, and for owner occupied property, we know which Ind AS is applicable. Ind AS 16 is applicable. Since we have been given the information that the entity has purchased an office building, so accordingly we will capitalize those expenses as per Ind AS 16. Whatever we have been given, that is 50 lakh rupees non-refundable property transfer tax of 2,50,000, direct legal cost of 50,000. So during 2019, that is in the same year itself, The entity redeveloped the building into two-story building. So expenditures on redevelopment were as follows. 1 lakh was on building plan approval, 10 lakh was on construction cost. However, it also includes 60,000 refundable purchase taxes and 40,000 is due to abnormal wastage of material and labor. Okay. So when the building was redeveloped, this much of expenditure was incurred. So as we know, whatever expenditure we had capitalized earlier, we will again capitalize those expenses which qualify as per Ind AS 16, as the case may be. So when the redevelopment of the building was completed on 1st October 2019, that is from 1st April 19 to 1st October 19, whatever expenditure we had done on the building, the entity rents out ground floor of the building to its subsidiary. So as and when the construction was completed, the ground floor of the building was rented out to the subsidiary under an operating lease in return for rental payment. Okay, consideration is also there. The subsidiary uses the building as a retail outlet for its products. The entity kept first floor for its own admin and maintenance staff usage. So what does it imply? Now you must be aware of the provisions of Ind AS 40, because when the question had come in the examination, the students didn't figure out which particular Ind AS is applicable, and even in the simple question they were not able to score good marks. Okay, so as we know, investment property is the property which is either land or building or part of building which is held by the owner. Okay, which is held by the owner or by the lessee as a ROU asset to earn rental or for capital appreciation. That is, there is a land or building which is held by the owner, okay, either to earn rentals, either to earn rental income or for capital appreciation. That your intention is to hold the asset for some time and then sell it by having consideration more than the purchase price. So as we know, in this case, the company has let out the building in the form of rent to its subsidiary. So obviously Ind AS 40 would be applicable on that part. Okay. So first of all, we should know how much amount is to be capitalized. See from the beginning of the question, the office building was purchased for 50 lakh. So this would be directly capitalized as per Ind AS 16. And there is a non-refundable property transfer tax. As we know, when there is non-refundable property tax, then you are required to capitalize it. What is the logic behind it? Suppose there would have been a refundable tax. So the entry would have been like this: purchase price, debit, refundable tax, debit to supplier. So obviously this has come as an asset in the form of receivable. Okay, this may be GST in Indian scenario. So obviously you are going to have the benefit of tax. So you cannot again capitalize it, okay, by adding it in the purchase price. So as far as non-refundable tax is concerned, that you cannot claim it as an asset in the future. Okay, so that part is added to the purchase price itself. Because if you are availing both the options, then this is a loss to the government. On the one hand, you are claiming depreciation, and on the other hand, you are claiming input credit also. Okay, so obviously you will be paying less output tax in the form of claiming of refundable tax. So in this case, since it is a non-refundable tax, 2,50,000 would be capitalized. So there is a direct legal cost of 50,000 also. So we know that any directly attributable expenditure with respect to the acquisition of the building would be capitalized too. So legal cost would be capitalized too. So during 2019, the entity redeveloped the building into two-story building. Expenditures on redevelopment have been given as this: 1 lakh building approval. This would also be capitalized. 10 lakh construction costs. However, it also includes 60,000 refundable purchase tax. So what would be its treatment? We will not capitalize 60,000 refundable purchase tax. The reason being, we will be claiming this much amount of purchase taxes in the form of input tax credit. Okay, so it would have been shown in the balance sheet as in the asset side, okay, as a receivable. So whenever we would be giving the output tax to the government, this much amount would be netted. Okay, so 10 lakh minus 60,000 would come to 9,40,000, and 40,000 is due to abnormal wastage of material and labor. Any abnormal wastage is not capitalized to the cost of the building. Okay, this much amount would directly go to the profit and loss account. Okay, it would be expensed off. It would not be capitalized. No capitalization with respect to abnormal waste. Okay, so when you add all these elements, how much amount you are going to get? 50 lakh plus 2,50,000 plus 50,000 plus 10,40,000. So 63,40,000. Okay. This amount we have got as per Ind AS 16 PPE. Because till that time we don't know how much amount is to be bifurcated into the investment property, because that decision has been taken on 1st October 2019. Till that time, that property would have been capitalized as per Ind AS 16 property, plant and equipment. Okay. So on 1st October 19, the entity rents out ground floor of the building to its subsidiary under operating lease. Okay. So further, we have been given information that the equal value can be attributed to each floor. That is for ground floor and first floor. Ground floor, since it has been given on rental, so Ind AS 40 is applicable on it, as we have discussed earlier. So how much amount would be there? 63,40,000 divided by 2, because equal amount is attributable to both the floors. So 63,40,000 divided by 2, 31,70,000. This much amount would be capitalized as per Ind AS 40. Okay, the question requirement was that how will the entity account for the above mentioned expenses in the books of account? What expenses? As per Ind AS 16, as per Ind AS 40, that you have to analyze of your own. You have to provide some background of the question as per the marks in the examination. Okay. So as per Ind AS 40, 31,70,000 would come in the balance sheet, and PPE with respect to first floor would also be 31,70,000. So it would also come under as per Ind AS 16, because that has been retained by the company, by the entity for administrative purposes. Okay. So even in the answer, you might have seen that this much amount was capitalized on 1st October 19, and abnormal wastage of material and labor was expensed of in profit and loss account. As far as building part is concerned, okay, Ind AS 16 would be applicable with respect to first floor, and Ind AS 40 would be applicable for ground floor. Okay, for each part of the floor, 31,70,000 is attributable, or say would be capitalized. So this is how you have to make the presentation in the exam. Why it is necessary? So that you are aware of the provisions of Ind AS 16 as well as Ind AS 40, because you may be asked further information that how you are going to present this information in the balance sheet. Suppose if you would have been asked this information, then you would have classified PPE with respect to 31,70,000 as PPE and investment property of 31,70,000 in the balance sheet. Okay, and as we know, they are separate line items as per schedule, as per division 2 of schedule 3. Okay, and even the notes or respective schedules are to be prepared separately for these respective line items. So further, we have been asked in the question that how the above building will be shown in the consolidated financial statement and in its separate financial statement. Please note, the building was given by the entity to its subsidiary. Okay, so when the consolidated financial statement will be prepared, so 63,40,000 would come in consolidated financial statements, because as a part of the group, it would be treated as one building only. And as far as separate financial statement is concerned, then as discussed, 31,70,000 would be considered as investment property, and 31,70,000 would be considered as item of property, plant and equipment. And in CFS, that is in consolidated financial statement, whole building would be classified as item of PPE for 63,40,000. So even in this question, the students had committed mistake. That is the reason that we have discussed this question, because it involves more than one provision of the respective standards. Okay, so if you have any doubt, kindly write. Next question, or we will. So the next question is going to be taken by Shilpa madam again, and then we will discuss another question later on.
Mention. So students, hope these two questions which we have discussed till this time is clear to you. If conditions present on reporting date, then it will be an adjusting event. Okay, Sumit, you gave the answer earlier. Two, show me one of two entries. Next. Okay. Now we'll be moving to the next one. This is question on Ind AS 7 and Ind AS 21. Again, this question was in your previous examination with January 21. The reason behind taking this question was on basic small issue of how to deal with foreign exchange in your cash flow statement. In your statement of cash flow, basically all cash items are reflected, but this foreign currency translation, any changes in the transaction value because of change in the foreign currency value, is how to reflect that, how to account that, so that your statement of cash flow tallies with the opening cash and cash equivalent, and you arrive at the closing cash and cash equivalent. So only one provision discussed, but this one provision has two standards in application. One is Ind AS 7 and Ind AS 21. So this question will be basically from your section 1 also, and also from your section 4 also. Application of both the standards falling in two different sections are covered in this particular question. Let's go through the question first. As you know, we'll be first moving to the requirement part. Hope my voice was clear to you all. Please prepare the extract of cash flow statement for the year ended 31st March 2020 as per the relevant Ind AS, and also show the foreign exchange profitability from these transactions for the financial year 1920. So we have to prepare statement of cash flows, and for statement of cash flows for the year ended 31st March 2020, we have to account for the foreign exchange profitability. First of all, when we are doing accounting in normal situation, when we are preparing statement of profit and loss, when we are preparing balance sheet, any foreign exchange transaction difference or exchange difference is accounted for or is routed through profit and loss. If it does not relate to PP, it will be routing to profit and loss. Otherwise, it may be forming part of your cost of the asset. In this question, you have to prepare a cash flow statement. So what is the accounting done in the asset valuation? That is not to be covered. What we have to do it, we have to see from the angle of Ind AS 7. Question is, Jet Limited has an overseas, Jet Limited as an Indian company has an overseas branch in USA. It has a bank account having balance of USD 7,000 as on 1st April 2019. We have to do accounting on 31st March 2020. So this is your opening date for this financial year. This is your opening date. During the financial year 1920, Jet Limited acquired computers for its USA office for USD 280, which was paid on same date, but date is not mentioned. There is no other transaction reported in USA or India. Exchange rates between INR means Indian rupees, and USD during the financial year 2019-20 were on 1st April 2019, 70. This application will be for 7,000. 30th November 2019, date of purchase of computer. So in the scenario part, your date of purchase of computer was not given, but while giving the exchange rates, it has been mentioned that date of purchase is 30th November 2019, and at that date, USD was 71 rupees per US dollar. Okay. So this will be used for your 280 rupees. Then you have to calculate, there is no other transaction in means 7,000 minus 280, whatever is your closing balance of US dollar. For that, you have to apply the closing rate, that is 71.5. Average for 2019-20, this is an additional information given to you. However, it won't be of use there. Prepare the extract of cash flow statement. So if we prepare it everything on the basis of dollar, and when we prepare everything on the basis of rupees, what will be the accounting? First of all, we have to do that. So just let me clear it first. First, based on USD, what will be the accounting, and based on INR, what will be the accounting? Your opening cash balance was USD 7,000, and as per INR, if we are using exchange rate, then exchange rate is 70. Okay, exchange rate is 70. So 70,000 into 70, it arrives to rupees 49, 4,90,000. Fine. So as per INR, it will go to 4 lakh. Now, as per this 2,80,000 during the year, we have purchased a computer, which will reduce our cash, opening cash. So now 7,000 minus 280, your closing cash balance comes to 6,720. But when we comes to INR, how to do the calculation? For 280 rupees, $280 exchange rate is given 71. So converting this $280 into 71 rupees per dollar, we'll find total of 19,880 rupees has been deducted for purchasing a computer by the USA branch. So So your figure comes to your closing balance as per Indian rupees should arrive at rupees 4,70,120. But this 6720 represents dollar, and this is INR. So if we convert this dollar at the end by the closing rate, then what will be the amount? 6720, if converted by the closing rate, that is 71.5. We find the amount which should be appearing in your balance sheet as per the standard will be 6720 into 71.5. It arrives to 4,80,480. So because as per Ind AS 21, your conversion should be as per the should be on the closing rate, because it is a monetary item and monetary item has to be converted as per the closing rate. So closing rate is 71.5. Based on that, amount which will be appearing in the balance sheet will be 4,80,480. But when we are calculating everything date wise, we automatically comes to the closing cash balance, which appears to be 4,70,120. But this will not be accounted. Then what is going to be accounted? This 4,80,000, but it is an increased value. It means your cash figure, which should be 4,70,000, now it is 4,80,000. There is exchange gain, and exchange gain will be recognized or will be routed through profit and loss. So, okay, your why questions only from January 21 exam. Okay, I'll be giving the answer for this also, Sumit, why we are taking the questions from January 21 examination. But let me complete this question and then I'll be replying you. So 4,80,480 and a difference of 4,70,120, which arrives to 10,360, which will be considered as your exchange gain. Your value has been increased. Whatever the dollar which branch is having, their value has been which will be showing in your balance sheet will be 4,80,480 instead of 4,70,000. It means there's a gain of 10,360. This is to be accounted. So 10,360 will be preparing the extract of cash flow statement, and where will it reflect? This is what the question is testing for, where it will be reflecting. When this was, since it is an exchange gain routed through profit and loss, it means in the net profit for which will be starting, this figure will be appearing inclusive of this gain. So whatever net profit we are having, it will be inclusive of this 10,360. So we assume that net profit is your, because there is no other transaction as it is mentioned in the question. There is no other transaction reported in USA or India. It means net profit is your 10,360. This 10,360 is all, entire 10,360 is on account of foreign exchange gain. But foreign exchange gain is a non-cash item. This is a basically adjusting entry. So this will be reduced in the cash flow statement because it is a non-cash item. So being a non-cash item, we will reduce this net profit by the foreign exchange. So amount comes to 0. So now, because we have purchased an asset, investing activity, it will be reflected in your books. So in your cash flow statement will be showing a purchase of computer or property, plant and equipment, which appears to 19,880. Since there is a cash outflow because of purchase of computer, so it is appearing in the cash flow statement within brackets. Now there is no cash flow from financing activity, so this is 0. Your total cash difference during the year is 19,080, with which will be adding the opening cash figure of 4,90,000, which appeared here. This 4,90,000, this is your opening cash, and this opening cash will be cash and a cash equivalent at the beginning of the year, 4,90,000. Difference of these two figures, 19,880 and 4,90,000, will not be your closing cash equivalent, because in case where an entity has foreign exchange gain or loss, while preparing your cash flow statement, your statement of cash flow, you have to account for adjustment for this foreign exchange gain to arrive at closing cash equivalent. So this is where we are looking for. As per para 28 of Ind AS 7, I'm just giving you this para number so that you can go after this session, you can check this particular paragraph which is there in Ind AS 7. This says, if an entity is having any foreign exchange gain or loss, that will not appear in your operating activity because of non-cash item, but while arriving at closing cash equivalent, you have to adjust this foreign exchange gain because it forms part of your closing equivalent, closing cash balance. So this 10,360 will be considered, because of which your cash equivalent at the closing date has been inflated, has been increased. So adjustment is required, even though it is a non-cash item, but not within the activities, operating activity, investing activity, or financing activity, but at the end while calculating the closing cash and cash equivalent. So this 10,360, this has been accounted here. This is how you have to present your Ind AS 7 when it comes to foreign exchange gain. So this is the figure, closing cash equivalent, which we have calculated here. Okay. Hope this is clear. Basically, this question is on presentation, how to present or how to reflect this foreign exchange gain in your statement of cash flows. The reason behind taking this question was because generally what happens in most of the examination, this is basically the student which asked, Sumit Jain asked. So Sumit, I'm replying you specifically. Mostly questions are appearing from the study material. This already have been informed to you by our council member today. Pramod Jain sir has already told you. He has shared his personal experience and whatever he used to do as a moderator, that questions appears from the study material. But this question was not in the study material and came for the first time in your January 2021 examination. And since it appeared in your examination and was not within the study material, many students were not able to appreciate this and they were not able to perform well in this examination. So that is the reason any tricky adjustment which was not covered in the study material in the form of illustration, concept has already been discussed in the study material, but there was a question missing on that. So we have covered this here in this session so that students who are going through the study material should not miss out this particular question. That is the reason. That's why we are saying BoS for your success. Anything which is missed, which may be missed out by the students, should be covered here. Further, this question requires how this calculate this 10,000. So coming back to the question, how this 10,360 has been arrived, this calculation I have showed you here, and saying this is a working note which is given in your solution as well. Fine. So student, this is the profitability, which was the requirement part of the question. Show the foreign exchange profitability from these transactions for the financial year 1920. So Sumit, now I'll be just removing your complaint. I'll be coming with that. Since you are having that, why I'm taking all the questions from January 2021 examination. So my next question will be from the recent examination from May 2022. What appeared in your May 2022 examination, I'll be covering that if time permits. So right now we have through with this question. I'll be again giving it to Anshul so that he continues with the another question, and then we'll come back to you with new question, not from January 2021 examination. Okay, so over to you, Anshul.
Thank you, Shilpa ma'am. So the next question which we are going to take now is from the recent RTP November 2022 examination. And that question is on Ind AS 116. And you may refer it from the RTP, that is question number 2, I think. Okay. So before doing the question of Ind AS 116, we just brush up the concepts related to Ind AS 116. Okay, so this question is from FR RTP of November 2022 examination. Although similar question also had appeared in the examination. But so as we know in lease, what we do Okay, what we are required to do? A lease is defined as a contract, okay, or a part of contract that conveys the right to control the use of an identified asset over a period of time in exchange for consideration. Okay, so whenever we are doing the question of lease, etc., first of all, you must ascertain that whether it is a contract which fulfills the definition as given in the Ind AS 116. Okay, so then only you should see the requirements of the question. It is important to know so that you can ascertain which standard is applicable on a particular case. Okay, so as we know that in the lease accounting, what we do, as far as lessee is concerned, he recognizes ROU asset as well as a lease liability. Okay, and how does the lease liability is measured? As per the present value of the lease payments to be made over the lease term, discounted using the implicit rate of discount as given in the question. Now, this is just the little background we have covered so far. Okay. Now, as far as this question is concerned, a company manufactures specialized machinery. So the company is in the manufacturing of machineries. The company offers customers the choice of either buying or leasing the machinery. So the company is giving the option to the customers. Either you can purchase the items directly or you can lease the items from the entity. If the company is directly selling the items to the customers, then obviously Ind AS 115 would be applicable. However, if there is element of lease is involved, then provisions of Ind AS 116 would also be applicable along with Ind AS 115. Okay, so you should be careful about the facts of the case, because if you are not able to get it from the beginning of the question, you may end up solving the question in a different manner, which may not be required as per the situation. So, okay, so in this case, a customer has chosen to lease the machinery. Okay, so instead of buying it, the customer has chosen to lease the machinery. So details with respect to the lease arrangement have been shown to us as follows. The lease commenced on 1st April X1 and it would last for 3 years. Okay. So the lessee is required to make 3 annual rental payables in arrears of 57,500. So please note this much amount would be required per annum. So the leased machinery is returned to the lessor at the end of the lease. Okay. So we are also given the fair value of the machinery as 1,50,000. Okay. Otherwise, if this information would not have been given in the question, how would you have calculated it? Present value of lease payments, okay, plus the present value of unguaranteed residual value, as we do in the normal cases of lessor. Okay. So the fair value of the machinery is 1,50,000, which is equivalent to the selling price of the machinery. Okay. The machinery cost 1 lakh to manufacture, and the lessor incurred 2,500 to negotiate and arrange the lease. Please note, since the company is in the manufacturing of machinery, so definitely this would have been shown in the books of the entity as inventory. Okay, so whenever there would be a sale or lease, this much amount of inventory would be credited. Okay, further there have been selling costs with respect to 2,500. This would be expensed off. Okay. The expected useful life, this would form part of the cost of sales, 2,500. The expected useful life of the machinery is 3 years. And even you might have noticed, even the lease for 3 years, and the machinery expected useful life is also for 3 years. So in such kind of cases, as we know, the lease is classified as finance lease. Okay, because it is covering the significant useful life of the asset. So the machinery has an expected residual value of 10,000 at the end of year 3. Okay. So we are also given the residual value of the machinery. The estimated residual value does not change over the term of the lease, and the interest rate implicit in the lease is 10.19%. And as a clarification, we are given in the question itself that the lessor classifies the lease as a finance lease. Now, what are the requirements of the question? It is also very important to understand. Otherwise, even if you read the facts of the question in a proper manner, but are not able to answer it as per the requirements of the question, you may not fetch the required marks as you deserve. So how should the lessor account for the same in its books of accounts? Please note, in whose books of accounts we are required to pass the entries? Lessor, not lessee. Okay. Pass necessary journal entries. First of all, we are required to explain the accounting treatment with respect to the facts as mentioned in the question, and further we are required to pass the necessary journal entries. Please note, we have not been asked for which period we are required to pass the journal entries. So accordingly, we will pass the journal entries as on initial recognition of the lease as well as during the period of the lease. That is, on subsequent recognition also we are required to pass the journal entries, because in question we have not been asked for which period we are required to pass the journal entries. So accordingly, we will cover the whole tenure as in the initial recognition as well as in the subsequent recognition. Okay. So as we know, what happens that in normal cases of finance lease, what kind of accounting treatment we do for the lessor? Can you help, please? Okay, so in normal cases of, I am not asking for this question because this question involves the manufacturer. Otherwise, in normal cases of lessor, what we do on lease commencement, okay, we de-recognize the carrying amount of the underlying asset in normal cases, and further we recognize the net investment in the lease, and whatever is difference between the two things, that is recognized as profit and loss. Okay. However, this question involves, this is the question which is of manufacturer lessor. Okay. So whenever there is a question which involves dealer lessor or manufacturer lessor, so what we are required to do at the commencement date, we recognize the revenue. Okay. By which amount we are required to pass the amount of revenue? The fair value of the underlying asset is recognized as a revenue. In the given case, how much is the fair value of the underlying asset? 1,50,000. Okay. Or the present value of the lease payments, which is discounting using the discount rate as mentioned in the question, whichever is lower. Okay. And if there has been credited revenue, cost of sales would also be debited. Okay. So in this case, when the question involves manufacturer or dealer lessors, then the cost or the carrying amount of the asset less the present value of the unguaranteed residual value is considered as cost of sales. Okay, that we are going to solve in the next step, but we are just doing it as for the purpose of background. And whatever difference is there, as per the policy of the company, okay, so the difference would be considered in selling profit or loss. Please note that in finance lease, regardless whether the lessor transferred the underlying asset as per Ind AS 115, we are required to recognize the selling profit or loss, okay, on the finance lease. Now we come to the calculation part. As far as calculation part is concerned, so we will pass the journal entries on initial recognition. As far as lease receivable is concerned, we would debit it. because as per the concept, what we are required to do? Lease receivable would be debited. This amount we would take it from the lessee. Okay, and these accounting entries are being passed in the books of ledger. Okay, in the case of manufacturer or dealer ledgers. So 1,50,000 would be debited. You can also calculate it otherwise. Please note the discount rate which has been given in the question is 10.19%. And as we had discussed in the previous questions also, you are required to take the present value factors up to 3 decimal places. However, if the information is given in the question, you are required to take it from that only. However, otherwise, you have to take 10.19%. For year 1, the present value factor with respect to 10.19% comes to 0.908. And for year 2, it comes to 0.824. And for year 3, it comes to 0.747. Okay. So if you sum up the present value factors of these 3 years, it comes to 0.908 plus 0.824 plus 0.747 is equal to 2.479. So 2.479 into 57,500 are the annual rental payables. Okay. And further, you can add the unguaranteed residual value 10,000 that is given as here into present value factor of third year 0.743. So this would, if you sum up these two elements, these would come to around 1,50,000. Now, since we are required to recognize revenue and corresponding to that cost of sales, so cost of sales would be debited by how much? Please note 1 lakh is the cost to manufacture the inventory. So obviously you will write 1 lakh. And further, as you might have noticed, the ledger has also incurred 2,500. Okay. So this much amount would also be added. Why? Why this much amount has to be added? Because these are the initial direct costs of entering the lease. However, you will deduct unguaranteed residual value from the cost of sales. Why this is so? Because this is the future income which is expected from the disposal of machinery. Okay, so this much amount we are not going to recognize it in the form of revenue, as well as we are not going to consider that component in the cost of sales also. So if you do the calculation of this part, we will get the amount of 95030. Okay, and as we know, inventory would be credited by how much amount? 1 lakh. And what else would be credited? Revenue. Revenue as per Ind AS 115 would be passed off. Okay. By how much amount? Lease receivable we have been given as 1,50,000. Okay. You might have noticed in the beginning we had discussed this concept that how much amount you are required to consider in the case of manufacturer or dealer ledger, the fair value of the underlying asset is to be considered as revenue, or the present value of the lease payments, okay, discounted using the market rate of discount, whichever is lower. So in this case, this would come to 1,50,000 less unguaranteed residual value, that is 10,000 into present value factor of third year, it would come 7,470. So this would be 1,42530. And as far as direct selling expenses are concerned, that would also be. So this entry is to be passed off at the time of initial recognition. Okay. And as we know, after the lease commencement, you have to subsequently measure the lease. This happens both in case of ledger as well as in lessee. But since we are solving the question for ledger, so what we are going to do? Okay, we would recognize finance income over the lease term. Okay, on the remaining balance of the net investment in the lease. The initial net investment in the lease was how much? 1,50,000. This is the lease receivable. So we will multiply the lease receivable balance, okay, by the discounting factor which has been given in the question, that is 10.19%, and then we would accrete it, we would additionally add it and deduct it from the annual lease payments, and thereby we would get the closing balance for the respective period. Okay, what we are required to do, we are required to reduce the net investment in the lease for the lease payment if they are received any over the period of the lease. So in this case, how we are going to subsequently measure the lease? Is there any query? So we are going to prepare the lease table with respect to the ledger. Okay. So initially, year 1 was there. What was the opening balance with respect to lease receivable? That is net investment in the lease. Initially, we know that amount was 1,50,000 in the given case. That is the fair value of the given asset. Okay. And interest income, that we are going to multiply it by the opening balance. Suppose it is A, then we will multiply it by the given rate of 10.19%. And if there are any lease payment by the company, sorry, by the lessee, we will deduct it. Okay. So we can decrease in lease receivable. This amount is necessary so that we can check how much amount has been received with respect to lease and how much amount is pertaining to the finance income, that is interest income. So closing balance would be there. So opening balance of with respect to lease receivable is 1,50,000, and if we multiply 1,50,000 into 10.19%, how much amount we would get? 1,50,000 into 10.19%, 15285. See why we are solving this question? Because the students have committed the fundamental error in this question by not recognizing it as the question of manufacturer ledger. So obviously they might have done this question on normal case only. So due to which their rest of the answer might have been wrong. So it is very important to understand the facts of the question as well as the requirements of the question. Even after understanding the facts of the question, you are required to see the requirements of the question in a very positive manner. Okay. So what is the lease payment? Every year 57,500 the company is getting, the lessor is getting. So if we deduct 57,500 from 515285, we get 42,215. So the closing balance of the lease receivable would be how much? A minus, suppose this is D. $107,785. So once again, the closing balance of the previous year would be the opening balance of the succeeding year. So 107,785 would be the opening balance. If we multiply it by 10.19%, we would get 10983. And again, 57,500 is the annual lease payment. And as far as lease receivable is concerned, then we are required to reduce it from 57,500. 57,500 minus 10983, we would get 46,517. And accordingly, the closing balance of the lease receivable will be 61268. And similarly for third year, 61268 would be the opening balance. Okay. 61268 into 10.19%. This comes to around 6243. However, we are not showing it in the fair work because since this is the last year, there may be some differences due to round off. So at the end of year 3, we are required to show our net investment in the lease as 10,000 because this is the residual value. Okay. So if there is any difference due to which the answer is not coming to 10,000, we will adjust it from the interest income, but it should be approx. It should not be too much higher. Okay. That you will come to know after solving the question. So interest income is 6243. How much is the lease payment? 57,500. So since the closing balance is 61268, it should be 51268 because this also includes 10,000 of guaranteed residual value. So 10,000 is the residual value. So to make it as 10,000, this interest should be rounded off to the 6232. Difference is due to approximation. Please note at the end of year 3, this would not come to 0. Please do not try to make this calculation deliberately to come down to 0. The reason being at the end of year 3, the expected residual value of the machine is 10,000. So accordingly, we would pass the journal entries for the period of 3 years. By how much amount? The lessor would get 57,500 from the lessee, and with respect to 42,215, this portion has to be reduced from the lease receivable, and the rest is to be considered as finance income. Okay, 15285. And similarly for year 2 and 3, you are required to pass the entries 46,517 and 10983. 46,517 lease receivable is to be reduced, and 10983 is the interest income. Okay. So as you might have noticed, over a period of time, this much amount of lease receivable in the form of asset is coming down. Okay, as the lessee is providing payment to the lessor. So at the end, 51268 and 6232 amount would be passed off in the form of journal entry. Please note in question, you were required to pass the journal entries also. So accordingly, we are passing the journal entries. On initial recognition also, we have passed the journal entry, as well as in the subsequent recognition. For all the years, we are passing the journal entries. Okay, and at the end of 3-year lease term, as we remember, since that leased machinery would be returned to the lessor. Okay, so the lessor would pass the entry by debiting inventory, because the company is in the manufacturing and dealing in that machinery itself. So that much amount would be debited, inventory would be debited, and lease receivable will be credited. And in that way, the balance with respect to lessee in the lessor books would come to zero after passing this entry. Okay, so this is how we are required to solve this question. If you have any question or query, you can ask the same. So Shilpa ma'am, you can please take the next question.
And hope students, since now we have left with less time, so we'll be covering, I believe we will be able to cover only one more question. Okay, before starting with this question, before starting, I would like to just give the reason for why we are taking up this question. This question is from our recent examination, May 2022. Similar question is given in our study material also. So we can say that every question which appeared in your May 2022 examination was from the study material as well. However, many representations were received from students' side based on the interpretation that there's some other alternative possible solution also. So I am here to discuss how alternative solution will be possible and why it is not possible and why it can be possible. What will be the difference in the language? कहाँ अगर language ये draft होती तो आपका ये solution बनता या ये interpretation बनता, और क्योंकि आपकी language ऐसे drafted थी इसीलिए इसमें interpretation आपका किस line में जाना चाहिए, किस direction में जाना चाहिए, we'll be discussing that. So this is a question from your May 2022 examination, question 4A. Basic simple question on financial instrument, which is on compound financial instrument. And in compound financial instrument, a basic provision as per your Ind AS 32 is that in case the option is rest with the holder of the instrument. If the option rests with the option holder of the instrument, then at that time, whether or not the holder avail that option, you have the entity who is issuing the instrument has to account that instrument as a financial liability. But what will be the value that has to be determined, and the difference of the liability will be recognized at the present value of all the future cash flows. In case your present value of future cash flows is different from the proceeds of the at the time of issuance, whatever the proceed is, then the difference will be considered as your equity. So that's why this particular compound, it is known as compound financial instrument, where option is given to the holder and the holder is the one who has the discretion to avail the option or not to avail the option. It will be considered as compound financial instrument, and entity has to account for as a financial liability at the present value, and the difference of the sale proceeds and the present value will be considered as or will be accounted as equity. This is the basic background of financial instrument. Many questions on this you'll be finding in the study material. This question is also from the study material. Reason for the taking of this question I have already discussed. Okay. The question is X Limited. Before starting the question, I'm just going through the requirement part. You are required to provide the journal entries for the financial year 2089 to 2021-22. So it means 19, 20, 21, 22. For 4 years, you have to prepare the journal entries. Calculate the interest expense across all 8 years of the life of the convertible bonds. Give the accounting entries if the holders of the bonds elect to convert the bonds to ordinary shares at the end of the 4th year. So, okay, so there are again 3 parts in the question. First, we have to pass the entries for all the 4 years. What will be the calculation of interest expense for all the 8 years? And so it means what? The term of the compound instrument is 8 years, but you have to pass all the accounting entries for 4 years only. Give the accounting entries of if the holders of the bond elect to convert the bonds to ordinary shares at the end of the 4th year. So if conversion is at the end of the 4th year, it means your financial instrument will not exist after 4th year. So your entry will end at the end, will complete at the end of 4th year. So what will be the accounting for the 4th year? These are the 3 requirements of the question. Let's go to the scenario. X Limited issues 1.5 crore rupees, 1.5 crore convertible bonds on 1st April 2018. So this is the issuance date. The bonds have a life of 8 years. Life is 8 years and a face value of rupees 10 each. Offers interest of 5.5% per annum payable at the end of each financial year. It means your interest is payable every year, at the end of every year. But what is not payable at the end of every year is your amount, principal amount of the bond. Bonds are issued at their face value, which is rupees 10, and each bond can be converted into 1 ordinary shares of X Limited at any time in the next 8 years. So first important word which you have to emphasize is can be. Your first point is it is a convertible bond, but you are not aware whether it is an optionally convertible or it is compulsory convertible. So how to identify whether this bond which is discussed in the question is your optionally convertible or it is a compulsory convertible bond? If nothing is mentioned, then there's a presumption that it is an optionally convertible bond. It is not mandatorily convertible bonds. Fine. So here in this case, it will be nothing is mentioned. It first as a presumption. In fact, it is a presumption that it will be considered as optionally convertible bonds. Still, if you don't want to take the presumption, then we'll go through the language of the question. Bonds are issued at their face value and each bond can be converted into 1 ordinary shares at any time in the next 8 years. So it is can be converted, not should be converted. It is not shall be converted. It means if it will, the language of the question would have been shall be converted, it means it maybe there is a chance of considering it as a mandatorily convertible bonds. Since it is mentioned can be converted, it is an optionally convertible bonds. This is all the second indication. First is the presumption, nothing is mentioned, then consider it as optionally convertible. If nothing is mentioned, you don't want to take the presumption language. I am just emphasizing the words which is important. So first is can be converted into 1 ordinary shares any time in the next 8 years. That's why your third requirement is that in case the holder at the end of 4th year. So at any time in the next 8 years is the option with the holder. Companies of a similar risk profile have recently issued debt with similar terms without the option for conversion. So there's an option for conversion. It means it is optionally convertible bonds. So that's why when you have to find out the market rate, effective interest rate for the similar bonds, you have to check whatever the conditions attached to that bonds are matching with other bonds which has been issued by the another entity in the industry or by the another entity of the industry in the market. So there we have to take comparable bonds only. So comparable bonds means without the option for conversion. It means this bond is with the option for conversion. You are required to provide these. So this 7% is your effective interest rate. without conversion option. So hope this point is clear why this in this question these bonds will be considered as optionally convertible bonds. Now since I told you what should be the language change in the language, because of this we can interpret it in an alternative manner. One is that instead of this can be, there should be shall be. It should be mentioned here which kind of bond, and without the option for conversion, or similar without the option without interest of. For example, it is mentioned in the question that companies of a similar risk profile having recently issued debt with similar terms without the option for conversion. So option for conversion तो वहाँ रहता ही नहीं, क्योंकि आपका already mandatory convertible bonds थे, यानी कि वहाँ पे option for conversion को हमें without option for conversion लेने की जरूरत ही नहीं है. हमें उस similar term का bond हमें market में without conversion option देखना. तो यहाँ पे भी अगर without conversion होता, without option for conversion होता है at the end of the year, तो फिर क्या मतलब इस पर्टिकुलर रेट को लेने का कोई पर्पस नहीं होता. वन मोर थिंग इज दैट जहां पे आपको मैंडेटरी कन्वर्टेबल बॉन्ड्स होते तो वहां पे आपको इफेक्टिव रेट की जरूरत नहीं होती. इफेक्टिव रेट्स आपको यहाँ इसलिए चाहिए पड़ रहे हैं क्योंकि यहाँ पर आपको एक अलग ऑप्शन दिया गया हुआ है. ठीक है. Now we'll just move. This question is basic background question of compound financial instrument. Now we have to prepare. First of all, we have to find out the present value of the liability component. So now it is very clear. The liability is the interest payable at the end of each year, and second is the liability, the principal amount which will be paid at the end of the 8th year if not opted in between by the holder. If it is opted in between, then that will be a different case. Accounting present value change at the initial recognition won't change. The calculation or the manner in which we are calculating the present value at the initial recognition date, that won't change, because we are not, the entity is not aware of when the holder is going to exercise at the end of first year, at the end of the second year, third year, fifth year, fourth year, fifth year, and so on. Since entity is not aware of, so entity won't assume any other options. They will simply follow the provisions which says that calculate the present value of the cash flows, which future cash flows, and whatever the present value arrives, recognize your liability based on that present value. Difference of convertible bonds, proceeds of convertible bonds, and the present value will be considered as equity. So first of all, we have to calculate the bond. Since it involves lots of calculation, I'm not doing it here. I'm simply going to the working note to explain what is. So for calculating the present value, we are having two future cash flows. One is interest, which is to be paid every year, paid per annum. Okay. And second is your principal amount, which is to be paid at the end of the term. Fine. So present value of interest was at the rate of 5.5%. And what was the principal amount? Principal amount was 1.5 crores. So 1.5 crores ka 5.5%, whatever comes per annum, we have to multiply with the annuity. Why we are multiplying with the annuity? Because interest is to be paid for all the 8 years, at the end of every years, and for the all 8 years. So the present value or the discounting factor of each year, when sum total, it comes to annuity. ओके. सो फर्स्ट ईयर का आपको डिस्काउंटिंग अगर आपको, और यहाँ पे डिस्काउंटिंग रेट हमारे कौन सा यूज करेंगे? 7% का. 7% का डिस्काउंट रेट करेंगे क्योंकि हमें मार्केट का रेट यूज करना है. जो एंटिटी हमें दे रही है वो एंटिटी का डिस्क्रिप्शन है, वो हम नहीं मान रहे कि वो इवन होगा इंडस्ट्री में. तो जो इंडस्ट्री में इवन होगा हमें वो कंसिडर करना है एज अ डिस्काउंटिंग फैक्टर, दैट वी कैन से इन द फॉर्म ऑफ इफेक्टिव इंटरेस्ट रेट. सो दिस 7% के हिसाब से अगर हम 7 का डिस्काउंटिंग परसेंट निकालते हैं तो 1 डिवाइडेड बाय 07 कम्स टू फर्स्ट ईयर में आता है 0.935. आप इसी तरह से करते जाएंगे तो सम टोटल इज 5.971. तो एन्युटी से हमने मल्टीप्लाई किया तो वी गेट the present value of interest which is to be paid every year. Now we have to calculate the principal amount, because principal amount we are assuming to be paid at the end of 8 years. So for the 8 year, what will be the discounting factor at the rate of 7%, which comes to 0.0582. Sorry, 0.582, 0.582. So multiplying that principal amount of 1 crore 50 lakh into 0.582, we'll arrive at the present value of the principal amount, which arrives to 87 lakh 30,000. So sum total of present value of principal amount and the present value of interest amount comes to 1 crore 36 lakh 56,075. This 1 crore 36 lakh 56,075 and the difference of the actual sale proceeds or actual amount of the bond will be considered as equity. This is the difference amount. Okay. So now financial liability will be recognized by this value. When financial liability is recognized by this amount, so difference, if you go through the journal entries, which is the requirement of the first part to provide the journal entries for 4 years. So this was the bank amount which we have received from the holder for bonds. When he had purchased the bond, this is the amount which he had paid. Out of that 1 crore 50 lakhs, 1 crore 36 lakhs and 56,000 something is recognized as liability and remaining is recognized as equity. This unbundling of liability, because we have to pay at the end of 8 years, this 1 crore 50 lakh, now we are recognizing only 1 crore 36 lakhs. So we have to add the interest income in that. So finance cost, which is involved in this particular value, this will be added up gradually every year, so that you at the end of 8 years, you arrive at 1 crore 50 lakh, which is to be paid out as a financial liability, which is the final value of the financial liability you'll be paying at the end of the 5th year. So we'll be doing unwinding of, or we can say unbundling of the amount. So interest at the rate of 7% will be charged on this, out of which we will be paying, in actual we'll be paying the interest at the rate of 5.5%, but interest which is to be recognized in your profit and loss account will be at the rate of 7%. In actual, you will be paying at the rate of 5.5%. Fine. So 1 crore 36 lakh 56,075 का 5 आप 7% निकालेंगे अगर, तो you will find 9,55,925. This figure is based on 7%. This is your finance cost, and actual interest which you are paying is on this amount at this rate. So 1 crore 50 lakh ka into 5.5% is 8,25,000. तो 8,25,000 जो है आपको, ये आपका इंटरेस्ट अमाउंट है जो आपने इस पे आउट कर रहे हैं एट द एंड ऑफ एवरी ईयर. सो सिंस जो एंड फर्स्ट ईयर के एंड में आपने 31 मार्च 2019 में इतना पे किया, तो जो डिफरेंस है एट द रेट ऑफ 7% और 5.5% का, वो आपका किस में एड अप हो जाएगा? लायबिलिटी में, इस वैल्यू में एड अप हो जाएगा. नेक्स्ट ईयर जब आप लायबिलिटी फिर से आप फाइनेंस कॉस्ट निकालेंगे, तो आप इस वैल्यू पे नहीं निकालेंगे, आप इस वैल्यू में इस वैल्यू को प्लस करके निकालेंगे. इट मींस आप नेक्स्ट ईयर 1 crore 36 lakh 56,075 प्लस 1 crore 30 lakhs 925, यानी जो फिगर आपकी आ रही है उस वैल्यू पे यू हैव टू कैलकुलेट द इंटरेस्ट अमाउंट फॉर नेक्स्ट ईयर. This amount comes to 1 crore 37 lakh 87,000. इस पे आप फिर से 7% निकालेंगे. इफ यू गो थ्रू दिस, अब इस वैल्यू पे आपने 7% निकाला है, तो आप उस पे 7% निकालेंगे तो आपकी ये वैल्यू आ जाएगी. एक बार आप कैलकुलेट करके देख लें. 9,65,090. अकॉर्डिंगली फिर आपने एक्चुअल पेमेंट तो आपकी 1 crore 50 lakh पे 5.5% हो रही है, क्योंकि प्रिंसिपल अमाउंट कुछ भी इंस्टॉलमेंट में पे नहीं हो रहा है. सिर्फ सिंस प्रिंसिपल अमाउंट इज नॉट पेड इन इंस्टॉलमेंट, प्रिंसिपल अमाउंट इज इन जो सेम है वो आपका. सो योर इंटरेस्ट वैल्यू एट द रेट ऑफ 5.5% एवरी ईयर विल बी सेम, 8,25,000 एवरी ईयर. आपकी ये वैल्यू चेंज होती जाएगी, क्योंकि इसमें एक्यूमुलेट हो रहा है आपका फाइनेंस कॉस्ट का एडिशनल कॉस्ट बर्डन विच इज लेइंग ऑन योर प्रॉफिट एंड लॉस स्टेटमेंट। ठीक है, सिमिलरली आप थर्ड ईयर में निकालेंगे, फोर्थ ईयर में निकालेंगे। आपको अगर 8 ईयर्स का निकाला जाए तो आपकी अल्टीमेट वैल्यू 1,50,000 की आती है, जो कि रिक्वायरमेंट इक्वेशन में। तो आप देखिए, अगर हम पूरे 8 ईयर्स का इंटरेस्ट निकाल रहे होते फाइनेंस कॉस्ट, उसका हम फाइनेंशियल स्टेटमेंट या प्रॉफिट एंड लॉस के स्टेटमेंट में क्या बर्डन आता आफ्टर पेइंग एज पर एक्चुअल इंटरेस्ट, तो ये हमारा एडअप हो रहा है इसमें। और उसके बाद हमारी एट द एंड ऑफ 8 ईयर हमारी फाइनेंशियल लायबिलिटी की वैल्यू 1,50,00,000 एक्यूमुलेट हो जाती है, जो कि हमें पे करना है। सो दिस इज द मैनर यू हैव टू कैलकुलेट द फाइनेंस कॉस्ट फॉर एवरी ईयर. Now the third part of the question was, what if the holder had redeemed that bond or have opted for conversion at the end of 4th year? In case at the end of 4th year उन्होंने ऑप्ट किया होता, तो हम पहले यहाँ पे देखेंगे 4th ईयर पे हमारी क्या लायबिलिटी की वैल्यू निकल के आ रही है। तो 4th ईयर पे हमारी वैल्यू निकल के आ रही है इतनी, 1,42,37,375. दिस वैल्यू विल बी, ये फाइनेंशियल लायबिलिटी थी। अब क्योंकि बॉन्ड आपने रीपे कर दिया, तो ये लायबिलिटी अब आपकी एग्जिस्ट नहीं करनी है। लायबिलिटी का आपका क्रेडिट बैलेंस होता है, तो इसे हम जब हम डी रिकॉग्नाइज करेंगे तो हम क्या करेंगे, डेबिट कर रहे होंगे। तो द एंट्री विल बी टू डेबिट दैट कन्वर्टेबल बॉन्ड फाइनेंशियल लायबिलिटी जो आपकी क्रिएट की थी आपने, इस वैल्यू आज की डेट में 4th ईयर के एंड में इस वैल्यू से स्टैंड अप हो रही है, तो ये वैल्यू हमारी यहाँ पर आ जाएगी, डेबिट हो जाएगी। इस पर हमने जो इस ईयर का जो हमने इक्विटी कंपोनेंट निकाला हुआ था, ये 13,43,925, ये भी अब डी रिकॉग्नाइज हो जाएगा। इक्विटी का भी क्रेडिट बैलेंस था, तो आपने इसको भी जब आप डी रिकॉग्नाइज करेंगे तो यहाँ पर वो भी आपका डेबिट हो जाएगा। इन दोनों का जो भी टोटल आएगा वो आपको शेयर कैपिटल की वैल्यू में एडजस्ट करना है। सो दिस विल बी, सिंस द होल्डर हैज ऑप्टेड फॉर कन्वर्जन, तो ये यहाँ पर कन्वर्जन हो जाएगा। सो पर्पस जो है आपको कहना कि ये क्वेश्चन में, अगर क्वेश्चन में मेंशन नहीं है तो आप ये मत मानिएगा कि एट द एंड ऑफ 8 ईयर हम इसे कन्वर्ट कर रहे हैं। क्वेश्चन में लिखा होगा, क्वेश्चन में नहीं लिखा होगा तो ये प्रिजम्पशन है कि ये ना लिखा है कि कन्वर्ट होगा। अगर ऑप्शनली कन्वर्टेबल था या होल्डर के पास कन्वर्जन राइट था विद इन 8 ईयर्स, तो अगर 8 ईयर्स में उसने राइट नहीं किया तो हम एट द एंड ऑफ 8 ईयर कंपल्सरी कन्वर्ट कर देंगे। क्वेश्चन में ऐसा मेंशन नहीं है, तो प्रिजम्पशन इस साइड नहीं जाएगी। प्रिजम्पशन हमेशा इस पार्ट पे जाएगी कि हमें पे आउट करना पड़ेगा। उसने बीच में नहीं कन्वर्जन लिया तो हमें पे करनी पड़ जाएगी। तो इन दैट केस हमेशा ये फाइनेंशियल लायबिलिटी ऑप्शनली कन्वर्टेबल बॉन्ड्स माने जाने चाहिए। लैंग्वेज भी मैंने आपको बता दी कि अगर आपको वहां से नहीं प्रिजम्पशन पता, प्रिजम्पशन किस क्वेश्चन में क्या लेना है, तो आपको वहां पे लैंग्वेज को कंसिडर करना है। जहां पे लिखा था कैन बी कन्वर्टेड, इट मीन्स कि कैन बी का मतलब है कि इट इज नॉट मैंडेटरी कन्वर्टेबल। तो होल्डर का कन्वर्जन है, नहीं तो फिर ये रिडीम ही माना जाएगा, रिडीम होना है। सो अकॉर्डिंगली हम यहाँ पे उसको कंपाउंड फाइनेंशियल इंस्ट्रूमेंट मानते हैं, और जो प्रिंसिपल अमाउंट है उसका प्रेजेंट वैल्यू भी फाइनेंशियल लायबिलिटी में कंसिडर किया जाएगा। अगर ये मैंडेटरी कन्वर्टेबल होता तो प्रिंसिपल अमाउंट का जो प्रेजेंट वैल्यू है एट द एंड ऑफ हमारा 8 ईयर्स, वो हमारा इक्विटी का पार्ट माना जाता है, फाइनेंशियल लायबिलिटी में हम कंसिडर नहीं करते। जो हमने फाइनेंशियल लायबिलिटी हमने निकाली यहाँ पर, उसमें हमने सिर्फ हम प्रिंसिपल अमाउंट को, बस अगर मैंडेटरी कन्वर्टेबल होता तो इन दैट केस हम सिर्फ प्रिंसिपल प्रेजेंट वैल्यू ऑफ इंटरेस्ट जो अमाउंट है उसको ही हम फाइनेंशियल लायबिलिटी मानते, और प्रिंसिपल अमाउंट का प्रेजेंट वैल्यू हम फाइनेंशियल लायबिलिटी नहीं मानते। तो इन सच सिचुएशन में क्या होता, अभी हमारे इस क्वेश्चन में क्योंकि ऑप्शनली कन्वर्टेबल था, लायबिलिटी की वैल्यू, लायबिलिटी कंपोनेंट की वैल्यू ज्यादा थी, इक्विटी कंपोनेंट की वैल्यू कम थी। बट व्हेन मैंडेटरी कन्वर्टेबल होता तो लायबिलिटी की कंपोनेंट की वैल्यू कम होती और इक्विटी कंपोनेंट की वैल्यू ज्यादा आती। ठीक है, तो होप स्टूडेंट्स, सिंस वी हैव ऑलरेडी, हमारे बीच में 10-15 मिनट्स का जो डिस्टर्बेंस था, आप कोई क्वेरी है तो यू मे आस्क, प्लीज आस्क योर क्वेरीज। Okay students, Hope you have taken benefit of these sessions. In case you have any other query for the questions which we have not taken up in this session, you can mail me at fr-final@icai.in. For Prerak, your query, you just share your email ID so that we reply you personally. Also, you can raise your query through mobile app. Mobile app में भी ask a query में option है. There also you can raise your query. Your reply, you'll get faster reply there. So you can raise your query there also. Okay, and in case you want any other question in future to be taken up, that also you can mail us. We'll be taking care of those questions in the upcoming sessions. Whenever there's an opportunity to take the session, we'll be covering those questions. Okay. All the best, students, and thank you. Thank you for your patience hearing.